reacting very vigorously to these set of numbers as well. But I think autos is what we stick with, Sonia. Bosch.
Well, we have Bosch. Once again over there, the revenue growth has been good, but it's margin pressures which are, hitting the company. So there's rising expenses. There's also higher personnel cost, higher material costs. Soumitra Bhattacharya, who's the MD of Bosch and the president of the Bosch Group, joins us now. Soumitra, thanks a lot for joining in. If you look at the margins, right, I mean, at 11.7% or thereabouts, it's much lower than the 12, 13, 13.5%, even 14% that you've done in the last many quarters. These higher expenses that have hit your margins this time, do you think it will continue in the second half of the year? And what is the average range that you could see for Bosch?
Thank you very much for having me on the talk today. Our quarter two results, as you know, that on the turnover side, we've had a pretty good upside. And I would say in relation to the market growth, they are better than the market growth in terms of when we look at revenues. In terms of our order books, we are pretty good, as I mentioned last time. And now coming to the matter, EBIT, PBT and PAT. So I do agree with you that the PAT is constant as compared to the previous year, same quarter. And we have shared that what the reasons are for. For example, we do see industry-wide material cost issue. This is led not only by the increases in the commodity pricing, the increases in the chip and electronics, but also in our case, this has had impact due to the mix between trading and manufacturing. Going forward, while we don't give guidance, I would say that the company is actively working. We don't look at quarter-to-quarter results. We look at both yearly as well as we look more importantly at the midterm. And both for the yearly as well as for the midterm, I do see that with the detailed work that we are doing, whether it's on localization, whether it's on the aspect of recovery on some of the, we can't recover everything, but recovery of the essentials on the increased, raw material, electronic, logistics cost, as also a very clear focus on how we handle our entire value chain.
Mr. Bhattacharya? Yes, I get that. I know you don't want to give us, any kind of guidance, but at least can you say with a fair degree of certainty that the worst of the margin pressures is behind the company? Is this a bottom for margins?
Yeah, that's a leading question. I will give an answer very clearly what I mentioned. The company is very determined to have a very good, a decent, double-digit profit, as also a very good cash flow, which we already attained. So both on the three elements that we have said that we will be equal to better than market on growth. This is something that we have a portfolio and we are determined to do. We want to retain and attain our double-digit profitability. And also, finally, we want to have very good free cash flows, which we already have sustained and done so far.
Hi, Mr. Bhattacharya. A couple of aspects I wanted to focus on. Exports, I think they were, 9 to 10% of your total mix. You could tell us what is the updated number out there. And could you clarify whether the margins out there on exports are better than what you're seeing? And also, just if you could tie in that point, the chip shortage issue, the worst is behind, right?
Okay, there are three questions, so I'll go one by one. The first part in relation to the exports. We in Bosch Limited have been, if you look at the past 5 years or so, we have been having anywhere between 7 and 9% as export. We want to, over the midterm, up the game on export while remaining dominantly focused towards the domestic market. So what I mean is to have not only a steady, but a good double-digit performance, in the range of around 10 and 15% in that bandwidth, because India opportunities offers a very, very high level in terms of our participation. And as you know, the Indian automotive market in FY22-23 is very likely in most fronts to cross the peaks of 18-19. Pasca, for example, 4.3 million Pascals against a 4.07 million in the peak. Now, on the matter, what was your last question?
Exports more lucrative, sir, versus domestic margins on the margin front, if you could clarify?
Right. These are dependent on products.
Okay.
It's not dependent. You can't generalize it. They're depending completely on product. And we, of course, ensure that the optimal margins are attained. Most important that we focus on is focusing on investments for the future to remain relevant for the market in a changing market.
Mr. Bhattacharya, a slightly broader question lastly around truck demand. Interest rates here in India are also headed higher. Do you foresee any challenges, demand-related issues because of that? I mean, what have you seen in previous cycles?
Yeah. Let's look at what's happened to the Pascal based on interest. While the interest rates have gone up in the last months and are likely to go up in the quarters coming, we know that from RBI and other sources, the demand, because of the pent-up demand, it's not let go. Pascals, for example, in this festive season in October, had a retail sales of 380,000. This is the highest ever.
Passenger cars are a different segment. That's why I specifically mentioned trucks, sir. Yeah, go on.
So in case of trucks, let's understand the dynamics. The highest peak in trucks was 480,000 in 1890. This year, for the fiscal year 22-23, it's likely to be between 360 and 370. The important point to note, it will take a long time, and when I say long, it means it's a midterm, if at all, not before the next 2 to 3 years, that we could touch 480. Reasons: tolls are out, FASTag is in, 20% increased loading was allowed, higher axle mix and of course competition from railways have all allowed that while there's renewal of fleets, the 480 may not come. Having said that, the interest rates will not make a major dent, in my view, if it doesn't become unreasonable for trucks to be climbing from the 370 slowly upward, but not reaching the 480.
Okay. Just if you can help us with, one number. On an average, what do you think the revenues could be per quarter? I'm asking because if you map the last 7-8 quarters, your revenue per quarter has gone up. I mean, about 7-8 quarters ago, you were doing on an average about 2,500 crores. It's gone up all the way to 3,600 crores as of the quarter gone by. Given that you're increasing your focus in the export markets and the domestic auto segment has improved, how much can the average run rate improve to for the second half of the year?
So as I mentioned before, that in the fiscal year 22-23, we should be minimum plus 15%. We currently can clearly say that the FY 22-23 will be far better than the plus 15%. So I don't see, revenues changing back to the 2,400 crores that you were mentioning. We are, as you rightly said, attaining a steady 3,500, 3,600 crores. And we should, going forward, be in that zone.
Right, so plus 15%, that's something that you spoke about earlier as well, a 15% revenue target for FY23. You're sticking to that. Thanks a lot, sir, for joining in and all the best. That's Bosch. Margins under pressure, but the top line growth has been pretty strong. But PB Fintech is higher in trade. In fact, I think it's up about 4% now. The company posted its Q2 earnings. The revenues have doubled. The losses have contracted this quarter. Earlier, Yash Jain caught up with Yashish Dahiya, who's the CEO and co-founder of PB Fintech, on the outlook for the company and whether he is looking to sell more stake. Listen in.
The total burn on the new initiatives going forward will be under 200 crores a year. And if you notice in Q4 this year, so what was our objective with the new initiatives, which is mainly the POSP business? Our objective was to become the market leader. which we started in July, and by December, we were the market leader. Once we became the market leader, we started moving towards the direction of cost optimization. So I think the peak cost was in the fourth quarter of last year, when the new initiatives lost about 91 crores in the quarter, down to about 65 in the last quarter. And by the last quarter of this year, I think we should be down to about 30 to 35 crores. But there is no urgency in trying to break even on that business. So in Q4, we will be adjusted EBITDA positive. And it's very straightforward, right? If you look at the adjusted EBITDA, there are two ingredients there. One is the core business, one is the new initiative. The core business made 12 crores of profit, the new initiative lost 65 crores. All that's happening in the next 2 quarters, the core business will make 50 crores and the new initiative will lose 35 crores. It will be positive. It's really that simple, right? No change in our business. You have a guaranteed profit of about 250, 300 crores sitting there 2 years later. I have sold what I had to sell.
Okay.
Okay, so I am done. I don't, that's basically it. So I think it takes people time to understand the core strength of a business, and they get digressed by a lot of fluff around it. The fluff is, did Yashish sell his stake? Are investors going to sell their stake? Is the new initiatives, when will they break even?
All right, then the PB Fintech management clearly stating out their plans, and the street is taking note of that. The stock, I think, was up close to around 2.5% to around 3%, come off a little bit from the high point of the day. Slip into a short break with news that the Nifty has given up almost all its gains that we saw earlier today. We'll come back and we'll get chatting with Mitesh Thakkar. Stay with us.